gets hurt when China slows down? How about Burberry? Courtney Reagan looks now at the China effect on high-end retail. Courtney.
Well, Taylor, in the years following the Great Recession, luxury retail sales actually soared, but this could be the beginning of the end. Burberry's fiscal first quarter revenue did grow 11%, but that was short of expectations and worrisome to investors looking long for high-end retail. While the retailer is famous for that iconic plaid print, is based in London, it's not the European debt crisis really that's the most concerning, but the economic slowdown in China, impacting sales in the mainland and sales to Chinese tourists worldwide. Chinese revenue growth fell to mid-teens from 20% in the second half of 2011. The Asia-Pacific region makes up the most revenue by percent for the British retailer. And a number of analysts and investors fear that Burberry's results are just the beginning of slowing high-end sales, though its fiscal year forecast appears unchanged. Burberry's CFO did note the company is mindful of negative data, but focuses on what it can control no matter the performance of the macroeconomy. Still, Goldman Sachs removing Burberry from its conviction buy list, and Bank of America Merrill Lynch also reducing its price target.
Courtney, thank you. Maria.
Thank you. So will China's slowing economy hit other high-end retailers? We spoke with Coach CEO Lou Frankfurt back in March, and he put on a brave face about it.
Chinese government announced that growth is slowing to about 7.3 or 7.5% this year.
Down from 8%.
It's still remarkable growth.
Of course.
And the middle-class consumer who we're targeting is growing at between 15 and 20% a year. And our category is growing even at a faster rate than that.
So are you even seeing any slowdown on the ground in China right now?
None whatsoever.
Yeah, okay,
very strong.
None whatsoever.
Maintaining our projections.
So, Coach, out with earnings soon, so we should know whether that statement from a few months ago holds up. More now with CNBC contributor Stacey Widlitz, who says the slowdown in China will negatively impact luxury retailers, and Eric Maschmeyer of Robert W. Baird, who still sees opportunities within the sector. Welcome to you both. Stacey, you heard what Mr. Frankfurt said. He basically said China's slowing, but it's not hurting us. Should he be more worried than he seems to be?
Well, I think a lot has changed in 3 months, and what has changed is we continue to get data from retailers and out of China saying growth is slowing there, and you really can't ignore it. Burberry is just the latest today. Things decelerated from 30% to 20%, now teens. You continue to get retail sales data coming out of China that's decelerating, and we'll get another data point tomorrow night to see if that further has come in.
So, Erica, what do you think? I mean, I know that there's been a lot of talk about China slowing down, but, you heard what he just said and what we know to be true, that 8% is still 8%. Do you think some of this is already baked into some of these stock prices of the luxury retailers?
I certainly do. China's not a new issue that's out there. We've been talking about whether it's going to be a hard landing or a soft landing, and I think that what we have been seeing so far, at least, is on the softer side.
So what do you want to do then from an investment standpoint?
I think from an investment standpoint, there are really attractive opportunities within the sector. And in particular, I think that within affordable luxury, there's an opportunity. Where Coach has seen their growth recently come from is from entering a lot of Tier 2 and Tier 3 stores. Burberry already has a majority of their sales in China, whereas for Coach, it's still only 6%. So, they've got a category that's growing rapidly in China. They've got still a middle-class consumer versus the luxury consumer that is growing at a faster rate than the overall economy, and also the opportunity to gain market share, especially in men's.
Now, let me ask you, Erica, Coach, or let me go back to Stacey. Coach hasn't announced its next earnings date just yet, but when it does, do you think that Coach will revise its outlook and that Frankfurt will be a little more circumspect than he was a couple of months ago?
Well, they're reporting the end of this month, and I would suspect that clearly we've seen a slew of data coming out that's negative. What Coach had said is that they did see a bit of a slowdown in the Tier 1, Beijing, the big cities in China. So the question is, are they now seeing a slowdown in Tier 2? And also, since they just went into Europe, we know that 30% of the business at a lot of the flagship stores come from the Chinese tourism. So is that slowing down too? That's the big question.
All right, Stacey, Erica, thank you very much for being with us. We'll check back with you soon again.